All right. How's it going, everybody? Let's go over the charts. Let's see what's going on in the market. Hope everybody had a great weekend. And I think today what we'll do is we'll just go right down the line here. Had some great meetings over the weekend and last week as well with some programmers. And as you know, we're trying to automate the TrendCloud system here. And I believe, hey, Graham, how's it going? Good to see you, buddy. And if we're able to automate the way we want to, we'll be able to actually take these trades overnight. And there's some very interesting programs. This looks odd. What is going on here? No, that's all right. 15 1 hour. Wow. Look at that 15-minute chart is just, we're just totally consolidating here. Yeah, automation is quite complicated. Hey, Frank, good to see you. Good morning. Automating all this stuff is a bit complicated, as you might know. And but we're getting there. We will find some kind of automation in the future. It's very interesting on that 15-minute chart how we've got these consolidations. Consolidation, false breakout, rip to the upside, right? Let's talk about what a false breakout is. A false breakout is exactly this, right? Consolidate, you break in one direction, and then it completely reverses and goes up. As a beginner, what you tend to do is you tend to think that there is a solution for every problem, which in essence there is, right? The solution would be to walk away, but we tend to think that there's more of a technical solution to counter every problem, and there really isn't. That's something that Peter Brandt talks about a lot in his blog and in his newsletter. And it's you can't come up with a trade plan. And I've said this before. You can't come up with a trade plan that's got a solution for every variable that might take place. You'll just drive yourself crazy. The best thing to do is this here hopefully caused some kind of mixed signal, and but right at the breakout of this consolidation, everything was in our favor, and it just completely reversed. Okay. And there's no way out of it, right? So completely reversed, and at the top break, at the break of the in the opposite direction here, we formed this rally-based rally right here. And that's what gave us the winner, right? That's what gave us the winner there. So, there's no way. So what's going to happen here today in the S&P? Right? Looks like it's about to break to the downside. Will it do that again? Let's pull this through here. Does it pull back into this rally-based rally and reverse? So you never know where something is going to reverse from, which is why any type of pullback into a demand zone. Take a close look at this, guys. What I'm about to say. Any pullback into a demand zone that is below your trend cloud is what you would call an aggressive move, right? Because you could get this. Does everyone see that? Whereas the pullback into this demand zone was above the trend cloud. You guys see that? You got this complete reversal here. Pull back into the trend cloud, into a demand zone, and the move up. Whereas this demand zone right here is going to be below our trend cloud. So you're pulling back into this demand zone without the cushioning of your trend cloud. It's gotta go through the trend cloud first and then into the demand zone. Let's see if we can find a couple more. In fact, look at how this consolidation here kept pulling back, breaking below that 50, right? And then break to the downside. There's nothing there. Now, here, right, we've got this right here. I don't really know if that's much of anything. We'd have to drop down. So you can get that, but you'll blow through, one or two demand zones getting there. It's it's not it's just not worth it. It's just not worth it. We want this type of stuff. See, this is this pulled back, right? This is below the trend cloud, but that's risky. So sometimes it works, sometimes it doesn't work. But why not just eliminate demand zones that are below the trend cloud so that you can pick up on everything that's in here? This was so strong. This is actually a parabolic movement. This is so strong, it doesn't even pull back into our trend cloud until it starts going sideways again. Pulls back. Doing a lot of weird stuff, isn't it? Pulling back really deep and then ripping to the downside. On that 15-minute chart, the micro S&P really is, it really is looking like that. Something to take notice of. Something to take notice of. Let's go to the 5. Do we get a better reading on the 5? Kind of looks like we do, don't we? Pulls back into the trend cloud and makes the move up. 5 waves, extended trend, reversal. That 5-minute chart seems to really track better. So I made an observation there, and that's all you can do, right? Even for the short term, right? It seems to track better. And that's what we're about, short-term rapid growth. Overall, wow, that's just from one extreme to the next. But it definitely tracks better. Okay. So it is 9:10, and we've got upward trends here. Let me take that off of time. Trend is up, trend is up. Momentum's down, and basically momentum is down here. Mixed signals. Mixed signals. MYM, the Dow, same thing, right? Same thing. So we do have the crossover now on the 5 and the 15. We really need this break of structure here now on the 1 hour. Where's our cycle indicator? We are cycling down. Okay, so we are cycling down. Momentum is just about to cross that negative 100. Cycling down on the high time frame with momentum. So the cycle indicator on that 1 hour chart is matching up with everything, and we are following this corrective move down. Where is this corrective move going to end? Somewhere in here, right? Somewhere in here. So we're almost there. We're almost there. And look what we've got right here. And you see how this demand zone is below our trend cloud. It's below our trend cloud. That's the only danger. So we've got a demand zone below the trend cloud with low time frame downtrend, high time frame downward momentum and cycling down. We got a lot of momentum coming into this demand zone. Logically, you know, you've got to have this picture in your head that this is possible right here. It could do that because of the momentum, or right, it could pull down, hit that, and start the climb up. Get rid of that arrow. So that's what we have to be aware of. And it's a very simple technique. Just draw some lines on your chart. You just draw some lines on your chart, and it will it will remind you, you know, what might be going on here. And we should be aware of that. NASDAQ, same thing. Same thing on the NASDAQ. Where's that corrective move going to end? Probably somewhere in that high time frame trend cloud. It's a little further away, but we are cycling down, right? This is a great timing indicator. The stochastic can really be used as a timing indicator. What's this, Graham? Recommended watching TradeStation, latest stream on TV later, more longer term view that I found it. Oh, nice. TradeStation. So what it does TradeStation have a YouTube channel? Well, obviously they do, but where is the what do you mean TradeStation latest stream on TV? I'll check that out, Graham. I'll check that out. Pulling back. Oh, on TradingView, really? TradeStation has a TradingView channel. No way. I'm definitely I'm definitely going to take a look at that. Huh. That's really interesting. So yeah, so here's the high time frame trend cloud, and we are looking for some sort of corrective move back into that trend cloud, high time frame trend cloud. All right. Not quite there yet on the 15-minute chart. Seems like on the Dow, we're already crossed over, and we're already crossed over on the S&P. NASDAQ is a bit stronger. Let's go to, and the Russell. Russell is actually in full swing to the downside there. Full swing. And what are we running into here? I'm not sure what that is. We are about to retest this area. Right. This is just a retest. Downward trend, cycling down, momentum is down. No, you didn't hijack anything. This is an open forum. No, that's very interesting stuff, Graham. I really like that. I used to use trade. I used to be so good at TradeStation. I don't remember how to use it at all now. But I would definitely like to see what they have to say. Micro Russell. Yeah, isn't that interesting? Micro Russell is always the one that sort of leads the pack. As far as direction, right? The Russell usually chooses a direction first, and then the rest of the indexes follow. Five-minute. Another 5-minute right here. But notice this, guys, on your TrendCloud. On that 15-minute chart or 5-minute chart, whenever you see a signal arrow, just drop a vertical line on it and look over and see if you're lined up to take that trade. Right? We have crossed below. We're in a downtrend. Percent K is down, cycling down, momentum is down. See that? Here, same thing. Looks even better. Right here, cycling down. Just starting to cycle down. Momentum is below negative 100. Cycling down, momentum is down. Downtrend, downtrend, downtrend. Those are the strongest signals. Those are the strongest signals. And that's what we have to automate. So that's the process that we're going through right now. Crude oil. Crude oil. Bird's eye view. Let's take a look. Okay. All right. There's your market edge. Curve zone. We're low on the curve. Supply zone. We're high on the curve, right? Right here. Draw it out like this. We're almost there, aren't we? So we're in this downtrend making lower lows. Here's your low. Here's your lower low. Right? Lower high, lower high, lower low. Okay. Everything's pointing to the downside. Everything's pointing to the downside there. 1 hour chart is extended. 1 hour chart is extended to the downside. Lot of force to the downside. So we're going to start to look for some signs. Okay, we're getting it here on the 15-minute chart. How about the 5-minute? 5-minute went extended as well and reversed. TrendCloud signal here. TrendCloud signal to the upside on the 5-minute chart, right? Cycling up, that's good. We don't have momentum. We're low on the curve. We've gone extended, cycling up, momentum is up. So the only thing we have against us is trend. Trend is to the downside still, okay? So that would be aggressive. That would be an aggressive move, right? We got some stocks here. BDRY, it's an ETF shipping fund. Oh, that does look interesting. Let's take a look at that. B-Dry, okay. What would the plan be here, guys? What would the plan be here on our opening range? Here you go. How about our ADR checkpoints? Where are we at? Plenty of room. Plenty of room to go. So on the opening range here, if we break to the upside, and we see a break above positive 100 on this move, right? On that move, like if it does something like this, we break above positive 100, we'll have momentum on our side. The extended trend, we know we're going to travel somewhere above this line here. And that's pretty far away. Pretty far away. That would be where we want to cross. Okay. So you see how I'm putting the logic together? Because if you understand the movement of price action, you'll be able to map things out better. You just have to understand the movement of price action, and you can map this stuff out. Okay? And that's your guide. That's your guide. Natural gas. Let's recalculate everything here. Okay, natural gas, what's going on here? Been going down for a while. Trend is now extended. Okay, we're bottoming out. We are bottoming out here. So when you see something like this, and you've got, you've got, looks like a lot of buyers came in here in this area. That's only one piece of information, Do you want to take a chance on just one piece of information? That's what you've got to understand. What does this have to look like in order for us to be a part of it? We've got to see something like this, right? Comes down, maybe retests. And breaks above that. It might be doing it now, right? The pivot candle, basically. Okay, you could look at it like this. Here's the top. Here's the top of the candle. It pulled down. Could this be the lower, or could this be the higher low? That's what you've got to decipher. Right now, we're climbing out of this market edge here. Okay, and I didn't get fancy with it. I just boxed it out. Everything else is against us, though. Everything else is against us. Because we don't have this. We don't have this yet, right? Everything else is against us. Still cycling down. Not enough energy to push this above above that 50 as of yet. Opening range. We are breaking to the upside on that opening range. We are breaking to the upside. Do we take the retest on this? Break to the upside, pull back into this area here? Can we take a chance on that? What evidence do we have to take the retest of this opening range? We're in a market edge, okay? That's one. And we've got an extended trend on the high time frame. So we know price wants to go up here. We just don't know when, right? We just don't know when. And as of right now, on this 5-minute chart, we would have to break through structure right here. Here's the pivot candle that caused this leg that broke structure here. All of this is inside movement, right? This is all taking place inside of this leg. Here's the swing high, and here's the swing low of this leg. Swing high, swing low. All of this taking place inside is inside movement in here. Okay. So, we've got a lot going against us. We don't really have enough, right? We're not even in an uptrend on that 1-hour chart, 15-minute chart. 15-minute chart, that's a V bottom, right? It just hits and off you go. What do we have here? You would really need to break through this supply zone right here on the 15-minute chart. If we were able to do this and it doesn't come all the way back down to here, right? If we could break through structure and then, look for some kind of support, right? Previous resistance becoming support, and then make the move up, right? We can take the pullback into this support area once it becomes support. As of right now, it is still resistance, right? As of right now, this is still resistance here. And I would rather look at this on the 15-minute chart. So as of right now, this pullback here, we would be taking a chance on the retest. We'd be taking a chance on the retest because we have too much downward pressure, right? We just don't have enough evidence that that's what's going to happen. So when you look at the opening range, your brain kind of tells you, oh, break to the upside, that means retest. That means to use that strategy or that tool. Don't forget the rest of your trade plan, right? Here it comes. It's coming back in for the retest, right? Is it a retest or is it reacting off of this here? Right? We don't know. We don't know. All we know is that we've got two downtrends. We would actually use this as a bull trap, provided that we weren't extended here on the high time frame. So if this was early in the trend on the high time frame, we would definitely be looking to take this because we've got momentum and trend on our side. There's more evidence for this to produce a downward movement than there is for this to choose a reversal. So there's a bunch of mixed signals. And this extended trend here, we don't know which one is going to work. Is it going to be the momentum or is it going to be the extended trend, right? Because we're looking for this on the extended trend. And there's no way to know which one it's going to be. All right, what do we got here? Estee Lauder. Let's take a look at that BDRY. Let's take a look at BDRY. See what's going on with that. Is that on our, did we save that one, Graham? Let's see. Stocks at 11. Nope, let's add that, BDRY. ETF, dry bulk shipping. Add it. Let's check it out. Oops. Turn all of that off. Oh my. Weekly chart. Hmm. Looks like it's in a lot of trouble. Came all the way back down. Right? We can just box this out. Here's your low. I mean, is that a coincidence? Weekly chart. Definitely a good marker there, right? Definitely something you want to box out and keep on the chart there. When did this thing start? Oh, there you go. Up 100% from November. Wow. Well, I would be reading some fundamentals on that for sure. Definitely read some fundamentals on that. But that's definitely it definitely came into, buyers definitely came in this area here. So yeah, absolutely. Buying some shares in that demand zone. 100%. 100%. Let's see here. 9:38. Let's go check out the open. One hour, 15-minute. Sideways on that 15-minute. And right here, we're going to start. Yeah, that opening range, it might be this whole consolidated area here. It might be this whole consolidation. And if we do get a breakout to the upside, we will be in an uptrend. But we won't have the momentum that we're looking for. The timing might be wrong on this. Let's go back to the Russell. Now the Russell is setting up for a nice move. If we form some kind of opening range, obviously we will, but when we form the opening range on the Russell, do you see how the Russell is really in alignment for a breakout to the downside? Breakout to the downside, on some kind of opening range, let's say this right here is the opening range right here. Breaks to the downside, retest. Look what you're retesting. Downtrend, downtrend, downtrend. Cycling down, momentum is down. Cycling down, momentum is down. That is what we're looking for. That is what we're looking for. We're looking for that move, right? This would be a much better retest of the opening range because of the setup. Downtrend on all three time frames, momentum down on all three time frames, right? Now we're talking. Now we're talking. Now there's no confusion as to what we're looking for. No confusion as to what we're looking for. We even broke structure right here. High time frame. Okay. I mean, nothing really exciting here. Go to the daily. Okay, daily. I would say this here is more significant, right? This right here. Right there, there's value. Rally-based rally. A lot of buyers came in here. I mean, you can see just by the candles. Look at this candle here. Rip to the upside. Just a huge move to the upside. It did come down, hit that, and it did make a move. Now we're starting to break back down. Maybe it's looking to retest this area. Just an observation, right? It's just an observation. However, that's looking pretty good. Okay, go back to the 4 hour. Okay, that's a pretty nice distance, right? On the lower time frames, it's going to be even further. So I say definitely stick with the Russell for that opening range. ADR checkpoints. ADR checkpoints are blocking. They are blocking our trade. They are blocking our trade. We definitely want to take into consideration that, right? So before we get to that demand zone, you know, if it pulls all the way down to here, that would be 150% of its average daily range. That is a lot. Opening range. Extend lines. Okay. It's official. It's official. There's the opening range right there. Unfortunately, man, that's not very far. That ADR level is not very far away. So it's going to go from here right to there. As soon as we break out of this, it'll be at its it will be at its average daily range. However, from here down, how about that? How about a bull trap? How about a bull trap? That could work. That's on the 15-minute chart. If it breaks through this, we do have this one up here as well. We've got this. Right? This is actually pulling back into the bottom part of that 1 hour trend cloud. So that would work. That would make sense. What would that look like? There you go. This zone is right inside of that 1 hour trend cloud. So we don't know which one it's going to hit. So we can take a chance on both. Right? Pulls up. What is that? I have to go out even further. Previous month's close. Previous month's close. Okay. Previous daily close. Previous daily low. Can take a chance on both of these. That would be the risk. That would be the risk right there. Less than 1% of our account. We'll see how that goes. Let's get over to gold. And we'll follow that through. Okay, gold. Wow, gold already hit. So gold already hit its average daily range. And just look at how gold is just in this, it's just going from extreme high all the way back down to extreme low. very difficult to follow something like this trend-wise. Trend following techniques don't work in this environment. Okay, and you can see why. Now we are getting, here's your low, higher low, maybe, right, when this finishes. So we are climbing out of this, but we're making here's the high all the way down to the extreme low. Pulls up, sideways, lower high. Higher, a higher low, and just climbing out. All the sellers coming in here, all the buyers are coming in here. There you go. Didn't even make it down. Didn't even make it down to that structure. This is the 4-hour demand zone right here. Rally, base, rally. Hasn't hit. What is it hitting here? There's nothing there. You'd have to go down to like maybe a 3-hour. No. Now you're back to looking at the lower time frames for an answer. Nope. Nothing to be found. So we don't have a visual on any type of structure. What do? Well, you can only trade what you see. You can only trade what you see. So there's really nothing you can do. Hits that. Okay. Momentum is down, trend is down. Breaking out to the upside. Just hit the ADR level, right? We hit that second ADR level. And now we're breaking to the upside. What's this thing doing? There's too many questions. Downtrend, but it's breaking to the upside. Momentum is down as well. Breaking to the upside, but it hit the ADR levels, which means reversal. Right? You'll never know. Too many mixed signals here. Copper. Aha. Well, this kind of makes sense. And we just hit. So it's like everything is in alignment here. Everything is in alignment here on copper, but it's already run its course. It's already run its course. Don't ignore that. Don't ignore that. Downtrend, downtrend, downtrend. Let's put that back on. There we go. So downtrend, downtrend, downtrend. Cycling down, momentum down. Breaking out to the downside. Great. That's what we want. And look what it's given us right here. It's given us that right there. But we've hit that average daily range, which means it's already traveled its average daily range, right? Do we take another shot? Do we take another shot at this? It's really not ideal. We usually use ADR as targets, right? So that's unfortunate. It's unfortunate where, you know, you've got everything on your side, but you're out of gas. It's like you finally have everything on your side, and now you're now you're out of gas. So do we have enough evidence to take this to here? Yeah, sure. Will it do that? You don't know. That's why you've got to take a small risk. And copper is very expensive. So that would be your risk right there. That would be the risk right there. I'm going to leave that and see how that works out. Because if it does go what we want, pulls back and makes another move to that second ADR level. Okay, just a ton of momentum and strength to the downside. It just might not happen today, right? This might get us into the trade, and then it will just kind of go back and forth and kind of stay in this area until tomorrow, until this recalculates. Silver. Okay. Silver looks like, okay, momentum and trend are with us, breaking out to the upside. Breaking out to the upside. There's our zone. Silver is very expensive. That's a $300 risk. We can't afford that. We'd have to do something like that, right? We've already got a bunch of trades on. So, you know, how do we maximize what we're doing here? Well, we can set up some trades, whichever one triggers. If something triggers first, we would have to close out so that we don't go over our limit. We don't want to go over any type of limit on our trading day, right? Okay. Okay, Graham. Sounds good, buddy. We'll see you tomorrow. So we've set up a bunch of trades, and I'm going to monitor this and see which one triggers, right? What about platinum? Seems like we've got the metals are in this downward movement here. Platinum is all, now this is completely, look at this, downtrend, but cycling up, momentum is up, and we're kind of going sideways here on that 15-minute chart. Doesn't make any sense, right? Platinum is not making any sense. But we've got some trades set up. So we'll see which ones trigger. And the first one that triggers, we'll manage it. And we will close out of those other trades. All right, Frank, I will see you later. That's it, 10 a.m., guys. So we're going to manage these trades, and I will see you guys tomorrow. Thanks, everybody.